Hello friends, Victor here. Welcome back to the Intelligent Investor channel. In today's video, I'm going to explain OpenAI and Nvidia's infinite money glitch and how it actually works. I wanted to make this video because many people who don't understand vendor financing believe that Nvidia, OpenAI, and Oracle are inflating their revenues by simply circulating money and investments between each other. Recently, Nvidia announced plans to invest up to $100 billion in OpenAI to help the company build and deploy at least 10 gigawatts of AI data centers over the next several years. OpenAI is Oracle's largest cloud customer, and with this investment, OpenAI will likely use the $100 billion to rent additional GPUs from Oracle. Oracle, in turn, will use that capital to buy even more rack-scale AI systems from Nvidia. In other words, if this so-called infinite money glitch were true, it would artificially inflate the revenues and market valuations of OpenAI, Nvidia, and Oracle. Now here's another way to look at this infinite money glitch. This is the bear thesis. OpenAI recently signed a $300 billion cloud deal with Oracle, so the company will have more compute to expand its AI services and earn more revenue from customers. Under this agreement, Oracle will build additional AI data centers and provide 4.5 gigawatts of computing capacity to OpenAI over the next few years. To support OpenAI, Oracle plans to purchase tens of billions of worth of AI GPUs and rack-scale AI systems from Nvidia. At the same time, Nvidia is planning to invest up to $100 billion in OpenAI to help the company deploy at least 10 gigawatts of AI data centers in the coming years. Meanwhile, OpenAI has also signed agreements to buy AI systems from AMD and develop custom ASICs with Broadcom. In this loop, it appears that all of these companies are circulating their revenues and investments around and effectively boosting their market values at the same time. Everyone wins in this scenario. Now, the most important question is this: how will OpenAI actually pay for all these massive AI commitments, including infrastructure buildouts, GPU rentals, NVIDIA and AMD GPUs, and custom ASICs with Broadcom over the next 5 years? So in this video, I'm going to break down the infinite money glitch and how it actually works. I will explain why it's widely misunderstood by many skeptics and Wall Street analysts. More importantly, I will explain whether OpenAI will have enough money to support its massive AI data center buildouts and long-term AI commitments. If you enjoyed this video, make sure to hit the like button, subscribe, and turn on notifications. I will continue making high-quality investing videos every week that will help you become a great investor. You can also follow me on X at Vic Investing. I will always share more investing insights and updates on the stocks I'm most bullish on. Each video usually takes me more than 30 hours to make, so if you'd like to support the channel, check out my Patreon in the description below. Our goal is to help our members become multi-millionaires through intelligent investing. As a premium member, you'll be able to follow all my latest stock trades and portfolio rebalancing. You will get access to my intrinsic valuation models for all the stocks I'm analyzing, so you'll know when a stock becomes undervalued, fairly valued, or overvalued. On top of that, you will receive my latest stock ratings, exclusive premium content, and access to our Patreon-only Intelligent Investor Discord community. All the links to my Patreon blog and my X account are in the video description. Make sure to check them out. So how does OpenAI and Nvidia's infinite money glitch really work? First, we have to understand what vendor financing is. Vendor financing is a type of lending where a vendor or seller provides money to a customer, and the customer then uses that money to buy the vendor's products or services. This arrangement helps the customer overcome upfront costs while allowing the vendor to secure a sale and lock in a long-term business relationship. Now, Nvidia's $100 billion investment in OpenAI is very similar to vendor financing because Nvidia is essentially providing $100 billion to OpenAI to help the company deploy 10 gigawatts of AI data centers. Of course, each of those data centers will require a massive number of NVIDIA AI systems. However, there's one key difference. OpenAI is not obligated to spend the entire $100 billion on NVIDIA GPUs, even though it will likely use much of that funding to rent additional computing capacity from Oracle. NVIDIA still makes it a preferred computing partner, but not an exclusive partner. OpenAI can still develop its own custom ASICs or use AMD GPUs for its AI data centers. Another important distinction is that NVIDIA will receive equity in OpenAI as each gigawatt of data center capacity is deployed. Many skeptics and analysts who are bearish on OpenAI and NVIDIA believe that NVIDIA is just circulating its own money, investing $100 billion in OpenAI and then getting that same $100 billion back through GPU sales or GPU rentals. That's not true at all. Here's why. As I mentioned earlier, NVIDIA's $100 billion investment in OpenAI makes it a preferred computing partner and not an exclusive computing partner. OpenAI is still free to use other competing accelerator vendors. For example, right before I started making this video, OpenAI announced a 6 gigawatt deployment using AMD GPUs starting in the second half of 2026. As part of that agreement, AMD has issued OpenAI a stock warrant for up to 160 million AMD shares, which is roughly 10% of AMD's outstanding shares, with tranches that will vest as specific milestones are achieved. The first tranche vests with an initial 1 gigawatt deployment, with more tranche unlocking as purchase scale up to 6 gigawatts. This means OpenAI may end up owning around 10% of AMD if all milestones are met. And if OpenAI exercises those AMD stock warrants, NVIDIA will eventually own AMD shares indirectly since it plans to invest $100 billion in OpenAI. Now, NVIDIA's $100 billion investment appears to be related to the Stargate project that was announced earlier this year. Under the Stargate project, OpenAI and its major partners, Oracle, SoftBank, and MGX, plan to invest $500 billion to build 10 gigawatts of AI data centers in the US over the next 4 years. NVIDIA is one of the major technology partners in this project. Recently, NVIDIA said that it will invest up to $100 billion in OpenAI to help the company deploy 10 gigawatts of AI data centers with NVIDIA systems. And in return, NVIDIA will receive equity in OpenAI as each gigawatt is deployed. Here's the important part you should know. I don't think NVIDIA is simply recycling $100 billion. NVIDIA will actually earn far more than that amount by helping OpenAI deploy at least 10 gigawatts of AI computing capacity over the next 4 to 5 years. Here's how the infinite money glitch really works. NVIDIA's data center revenue scales directly with the number of AI data centers being built, and each gigawatt scale data center usually requires a large amount of NVIDIA hardware. Each gigawatt AI data center costs roughly $50 billion to build, and the largest cost is always NVIDIA's AI systems. According to Jensen Huang, NVIDIA earns about $35 to $40 billion in revenue per gigawatt of deployed capacity. So if the Stargate project builds all 10 gigawatts of computing capacity as planned, NVIDIA should generate roughly $350 billion in total revenue, mainly from sales of its latest AI platforms like Blackwell Ultra, Vera Rubin Ultra, and Feynman platforms. Of course, OpenAI will diversify by investing in AMD GPUs and custom AI ASICs, but NVIDIA will still dominate most of the AI deployment. If NVIDIA were just circulating $100 billion through OpenAI and Oracle, it will only make back about $100 billion. But based on my estimate, NVIDIA should earn around $350 billion from 10 gigawatts of AI data center deployments that are being built right now. This is more than triple its $100 billion investment in OpenAI. However, the biggest risk is whether OpenAI can make enough money and raise enough funding to cover the huge cost of building AI infrastructure, renting GPUs, developing ASICs, and buying NVIDIA and AMD systems. At the time of making this video, OpenAI is still losing billions of dollars every year. OpenAI is projected to earn $13 billion this year, which is obviously not enough to cover all the major AI commitments with Microsoft, Oracle, SoftBank, NVIDIA, AMD, CoreWeave, and Broadcom. According to Jensen Huang, OpenAI will use its future revenue plus additional financing from debt and equity to pay for its AI infrastructure buildouts. Jensen Huang believes that OpenAI will become the next multi-trillion-dollar hyperscaler company. Jensen Huang said this in a recent interview with BG2 Pod. This is one of the best interviews I've heard recently.
So one of the pushbacks, I turned on CNBC yesterday. They're like, oh, glut, bubble. When I turned on Bloomberg, it was about round tripping and circular revenues. Okay. And so for the benefit of people, at home, these arrangements are when companies enter into a misleading transaction that artificially inflates revenue without any underlying economic substance. So in other words, growth's propped up by financial engineering, not by customer demand. And the canonical case everybody's referencing, of course, is Cisco and Nortel from the last bubble 25 years ago. So when you guys or Microsoft or Amazon are investing in companies that are also your big customers, in this case, you guys investing in OpenAI, while OpenAI is buying tens of billions of chips, just remind us and remind everybody else, like what are the analysts on Bloomberg and otherwise getting wrong when they're hyperventilating about circular revenues or about round tripping?
10 gigawatts is like $400 billion, right? Yeah. Something like that. And that $400 billion will have to be largely funded by their offtake, right? Their revenues, which is growing exponentially. It has to be funded by their capital, the money they've raised through equity, and whatever debt they can raise. Those are the three vehicles. And the equity that they could raise and the debt that they could raise has something to do with the confidence of the revenues that they could sustain.
For sure.
And so smart investors and smart lenders will consider all of these factors. Fundamentally, that's what they're going to do. That's their company. It's not my business. And of course, we have to stay very close to them to make sure that we build in support of their continued growth. Okay? And so there's the revenue side of it, and it has nothing to do with the investment side of it. The investment side of it is not tied to anything. It's an opportunity to invest in them. And as we were mentioning earlier, this is likely going to be the next multi-trillion-dollar hyperscale company. And who doesn't want to be an investor in that? My only regret is that they invited us to invest early on.
I remember those conversations.
And we were so poor, that we were so poor we didn't invest enough. And I should have given them all my money.
And the reality is, if you guys don't do your jobs and keep up with, if Vera Rubin doesn't turn into a good chip, they can go get other chips and put them in these data centers.
Yeah, that's
right. There's no obligation that they have to use your chips. And
that's right.
And like you said, you're looking at this as an opportunistic equity investment. The other thing I would say,
and we've made some great investments. I've got to put it out there.
Right.
We invested in XAI. Yeah. We invested in CoreWeave.
Incredible.
Yeah. How smart was that?
Yeah. As I go back to this, the other fundamental thing, it seems to me, is, you're putting it out there. You're saying this is what we're doing. And the underlying economic substance here, right? It's not that you're just somehow sending revenues back and forth between the two companies. We got people sending money every month for ChatGPT, 1.5 billion monthly users using the product. You just said every enterprise in the world is either going to do this or they will die. Every sovereign views this as existential to their national security and economic security as nuclear power was.
What person, company, or nation says intelligence is basically optional for us? Right. I mean, it's fundamental to them.
Well,
it's the automation of intelligence.
Here's another important part you should know. According to a recent report from The Information, OpenAI has shared its updated projected revenue for the next 5 years with investors. OpenAI expects to generate around $13 billion in revenue this year. Over the next 5 years, the company projects its revenue to grow to as much as $200 billion by 2030. This is even higher than its previous forecast of $174 billion. Now, to put this in perspective, Meta's latest trailing 12-month revenue is around $179 billion, while Google's is around $371 billion. However, according to the same report, OpenAI is projected to have a total negative free cash flow of around $115 billion between now and 2029. This is roughly $80 billion more than earlier forecasts. More importantly, the company expects to begin generating significant positive free cash flow by 2030, once it achieves large economies of scale and builds enough AI infrastructure to fully serve its customers. However, the biggest risk is that OpenAI may take longer to become profitable. Building at least 10 gigawatts of AI data centers, renting GPUs, purchasing AI systems from Nvidia and AMD, and developing custom ASICs are all extremely expensive. All these AI commitments combined are expected to cost at least $500 billion for OpenAI. The main concern is that OpenAI may not have enough capital to fulfill all these massive AI infrastructure commitments. Now, here's my prediction. OpenAI has become too important to fail, not just for the AI industry, but for the many tech companies that are deeply tied to the company. For example, as reported by the Financial Times, OpenAI has major commercial partnerships with Microsoft, SoftBank, Oracle, Nvidia, CoreWeave, Broadcom, Google, Amazon, as well as many VC firms and sovereign investors. Even if OpenAI runs out of cash or does not have enough money, it will still be able to raise significant capital from investors because it has become the most important AI lab in the world. OpenAI builds some of the most advanced frontier AI models and applications that are widely used by over 800 million active users around the world. More importantly, the company is continually building much more advanced AI models for individuals, small and mid-sized businesses, and large enterprise customers. So as long as OpenAI keeps building more advanced and more capable AI models and apps, it will continue to attract massive investments from its major partners and investors, including Microsoft, SoftBank, Nvidia, and other large VC firms that have very deep pockets. Of course, we also need to look at OpenAI's key business metrics. According to estimates from BG2Pod, ChatGPT's annual search volume has been growing much faster than Google's during their first 3 years. This is a very important metric because it shows that ChatGPT's AI demand is real and that it will continue to accelerate as OpenAI releases even more powerful AI models and applications. Since the launch of ChatGPT, OpenAI's revenue growth has already outpaced both Google's and Meta's revenue growth during their first 3 years. This suggests that OpenAI's revenue will likely accelerate even more once it has more computing capacity and reach 10 gigawatts of computing power. As of now, OpenAI already has over 800 million weekly active users and is on track to reach 1 billion users in the coming months. Currently, OpenAI's biggest constraint is not having enough computing capacity. The company simply does not have enough compute to keep up with its growth and to fully serve its customers. This is why OpenAI cannot release even more capable models to the public yet. So once OpenAI increases its computing capacity to at least 10 gigawatts, its revenue will likely grow even faster because the company can earn more revenues through ChatGPT Premium and Pro subscriptions, APIs, apps within ChatGPT, AI agents, advertising, in-app shopping, and new products such as Sora 2 that will generate a lot more AI tokens. Now, AI revenue is largely driven by the amount of input and output tokens generated by AI systems. So as long as token usage continues to grow exponentially, we can expect the leading AI companies such as Google, OpenAI, and Anthropic to keep earning higher AI revenues over time. Here's one example. Google's AI token usage has been growing exponentially in recent months because of surging AI adoption and customer demand. According to Google, the company was processing 480 trillion tokens per month in May of this year, compared to just 9.7 trillion tokens a year earlier. This is a whopping 50x growth in 1 year. Just 1 month later, Google's token volume nearly doubled, reaching 980 trillion tokens per month in June, or nearly 1 quadrillion tokens. AI token is expected to grow substantially over time because the latest reasoning AI models and AI video generators, such as Veo 3 and Sora 2, consume far more tokens per query than the non-recent models that produce much simpler one-shot answers. Just remember, more AI tokens and higher AI consumption usually lead to higher AI revenues for the leading AI companies. Now let's go back to Nvidia. I want to show you this clip from BG2Pod. In it, Jensen Huang explains why Nvidia's data center revenue is closely tied to the number of gigawatt-scale data centers being built around the world. He mentioned that Nvidia earns around 35 to 40 billion for every 1 gigawatt data center that's deployed. So if the Stargate project ends up building 10 gigawatts of AI data centers, NVIDIA should generate between 350 billion and 400 billion in total revenue over time.
If we are seeing 50x token increase from Google, and probably in that time, I would estimate 10 times of algorithmic plus GPU, accelerated computing, like efficiencies throughout that period.
Yep.
That means they had to increase their compute maybe like 3 to 4x because you weren't getting it from a better chip. You just have to add more capacity.
That's right.
You scale with power, you scale with, and I guess like people look at the analog of how quickly data centers grew before, but we were still riding Moore's law then. Now, to your point.
And notice while we were writing Moore's law, the industry was growing. So in fact, the computation demand was growing exponentially.
Yeah, exactly. Now it feels like the computation is growing way faster.
Yeah, double exponentially. Yeah.
And we're not getting any benefit from Moore's law.
Right.
So the amount of compute that we're bringing on now, even though it's maybe 10x what it was before in terms of power footprint, all of that, it's not even enough anyways.
What I think you have to go back to is number one, extreme co-design is more important than ever. That's the reason why NVIDIA builds all these different chips.
Exactly.
So if we go from 400 billion of AI systems.
But what Clark says, though, is not fundamentally wrong. The one thing I will say is this. The revenues of the AI infrastructure industry is going to reflect the total amount of power we deploy. The reason why gigawatts is a good measure, good way to talk about the scale of your business, because NVIDIA's indexed to dollars per gigawatt, right? For every dollar, every gigawatt, we generate about $40 billion. And so if the world increases the total amount of power capacity by a factor of 10 for AI infrastructure, our business opportunity increases by a factor of 10.
Here is another important point you should know. Alibaba CEO Eddie Wu recently said that he expects Alibaba Cloud's energy consumption to grow 10x from 2022 to 2032. This surge is largely driven by the massive demand for AI compute and advanced AI applications. Just like leading US AI companies, Alibaba is also aiming to achieve artificial superintelligence, or ASI. Meanwhile, OpenAI's forecast is even more ambitious. According to Sam Altman, OpenAI expects its computing capacity to reach 2 gigawatts by the end of 2025 and potentially as much as 250 gigawatts by 2033. Of course, 250 gigawatts by 2033 is likely unrealistic because it will exceed the total power capacity of many countries. According to Bloomberg, power demand from AI data centers is expected to quadruple over the next 10 years. Brookfield's internal research projects the global AI compute capacity will rise from 7 gigawatts today to around 82 gigawatts by 2034. That's an enormous increase of 75 gigawatts, representing a 28% compound annual growth rate over the next decade. All of these forecasts suggest that NVIDIA's total addressable market and data center revenue will continue to grow substantially over the next 5 to 10 years, since NVIDIA typically earns around 35 to 40 billion for every 1 gigawatt of data center capacity deployed. Now, if we compare the data center forecast I showed you earlier to these consensus revenue forecasts, I believe NVIDIA's revenue growth should be much higher over the next 5 years. AI infrastructure buildouts are expected to continue growing at high double-digit rates annually over the next 5 to 10 years. Now, here's my prediction. I wouldn't be surprised if NVIDIA becomes the first $10 trillion company within the next 5 years because of the AI infrastructure buildouts around the world and the large demand for more AI compute and frontier AI models. I expect the leading AI companies, including OpenAI, Google, xAI, Anthropic, Alibaba, and DeepSeek, will eventually achieve AGI or even ASI. As AI models become more capable and the cost of training and inferencing continues to decrease, we will see even greater AI demand, higher token generation, higher AI revenues, and eventually higher profits for these AI companies. So will I buy more NVIDIA stock? My answer is yes. I plan to buy more NVIDIA shares whenever the stock becomes undervalued. Right now, based on our investing software, NVIDIA is trading slightly above its fair value, which I estimate to be around $178 per share. If Nvidia dips below its fair value, I will likely add more shares. Our 12-month price target for Nvidia is around $211 per share, compared to analysts' average price target of $220 per share. In summary, I believe many skeptics and Wall Street analysts misunderstand OpenAI and Nvidia's infinite money glitch. Nvidia is not simply circulating $100 billion around and inflating its value. If Nvidia were just circulating $100 billion by investing that same amount into OpenAI, which would then rent Nvidia GPUs from Oracle, Nvidia will only earn about $100 billion in return. But based on my estimates, Nvidia should earn roughly $350 billion in total revenue from just the Stargate project. Nvidia's real goal is to help OpenAI become a hyperscale company similar to Oracle, Meta, and Google. Of course, the biggest risk is that OpenAI may take longer to become profitable, and the company will likely need even more capital from investors over the next 5 years. And if OpenAI doesn't generate enough revenue to support its massive AI infrastructure build-out, it will still have many investors who are willing to step in and invest in the company. This is because OpenAI is too important to the entire AI industry and to its key partners, including NVIDIA, AMD, Oracle, SoftBank, Broadcom, many VC firms, and sovereign investors. Now, everything I've shared here is just my opinion based on my own research and analysis. This content is for informational and educational purposes only. It is not financial advice. There are always risks in investing, so it's important to invest in what you know and not speculate. Always do your own research and thorough due diligence first before making any investment decisions. Thank you for watching and supporting our channel. This is Victor from the Intelligent Investor channel, and I will see you in the next video.